Hey everyone, welcome back to TradeVest, your go-to spot for breaking down the wild world of finance and crypto. If you've been watching your portfolio lately, you know things are heating up. From market volatility to geopolitical drama, the last week has been a roller coaster. Today, we're diving deep. What shook the financial markets? How's it hitting crypto? What's October got in store for your favorite coins? Plus, we'll unpack global liquidity and the brewing tensions between superpowers like the US, Russia, China, and India. Buckle up, this could change how you invest. If you're new here, smash that subscribe button and hit the bell for more insights. Let's jump in. First off, let's rewind to the past week, August 2nd to 9th, 2025. Global equity markets were flirting with all-time highs but hit some bumps. Stocks dipped about 1%. The British pound followed suit, while bonds rallied as yields dropped. Everyone's betting on those interest rate cuts. A big surprise? U.S. payroll numbers missed big time, spiking volatility and sending the VIX, that's the volatility index, often called the market's fear gauge, higher. Remember, August is historically shaky for markets, averaging an 8.4% VIX jump since 1990. But hey, resilience shone through. Manda deals, short for mergers and acquisitions, are booming. And even with natural disasters costing insurers a whopping $80 billion in the first half of the year, double the average, markets held firm. Wall Street's entering this month wary of labor woes and central bank moves like the Bank of England's rate cuts. And get this, U.S. consumers are super pessimistic about jobs. 60% expect unemployment to rise, the highest since the financial crisis. What do you think? Is this a dip to buy or a sign of bigger trouble? Drop your thoughts in the comments. Now, how did all this chaos spill over to crypto? Spoiler, it wasn't pretty, but there's hope. The market wobbled into August. Bitcoin dropped 3% to around $113,231. Ether slid 6%, Solana 5%, thanks to new U.S. tariffs sparking a risk-off vibe. That payroll miss and global stock plunges amplified the sell-off, with crypto mirroring traditional assets. But zoom out. July saw the crypto market cap surge 13.3%, fueled by Bitcoin's highs and tokenized stocks trending. U.S. rates and dollar strength are key drivers. They mess with investor appetite. August's packed with macro data, regs, and conferences that could swing things wild. Bitcoin's stuck below 120K, but institutional buys and low vol hint at a breakout. On X, folks are buzzing about hedge funds hiding exposures. Could this echo in crypto derivatives? Despite the dips, tokenized assets are gaining steam, showing crypto's got legs. Question for you, holding through the volatility or taking profits? Looking ahead, October 2025 could be crypto's blockbuster month. Analysts are calling it a potential cycle peak. Chamath Palihapitiya sees Bitcoin at $500 on mass adoption. Cryptflow predicts a top between September and November based on history. Fred Krueger? A bold $600K. Galaxy Research eyes $185K with stablecoins and DeFi booming. DeFi stands for decentralized finance, which is blockchain-based financial services without traditional intermediaries. VanEck says the bull peaks in Q1 2026, that's the first quarter of 2026, so October's build-up time. Changely short-term, $128 by now, higher in October. Alts like Ethereum, Solana, XRP could outperform if Bitcoin breaks $70. Altseason alert. X chatter. Bitcoin to 120 in October, 150 in November. Shiba Inu might pump, but tempered expectations. Catalysts, U.S. elections, ETFs, exchange-traded funds, which are investment funds traded on stock exchanges, and policies. Risks, tariffs, and vol bull run might wrap by Q1 2026. Shifting gears to liquidity, the lifeblood of markets. Globally, it's expanding. Cross-border bank credit jumped $1.5 trillion in Q1 to $34.7 trillion. USD, EUR, JPY credits grew 5%, 10%, 6%. U.S. conditions are loose per the NFCI at -0.53. NFCI is the National Financial Conditions Index, a measure where negative values indicate easier financial conditions. China's M2 up 8.3% YOY. M2 is a broad money supply measure including cash, checking deposits, and easily convertible near money, and YOY means year over year. But watch out, slowing growth could tighten things in H2, the second half of the year, especially with a stronger dollar hitting emerging markets. Post-GFC changes make liquidity more risk-sensitive. GFC refers to the global financial crisis of 2008. Fed's shrinking balance sheet? less banking juice. Cycle flip in 2026? X talks blockchain for tokenized stocks boosting liquidity in crises. Short-term supportive but brace for squeezes. Could fuel crypto's next leg up or down. And now the geopolitical powder keg. Tensions between the US, Russia, China, and India are skyrocketing. Trump slapped 25 to 50% tariffs on India for buying Russian oil, calling it war funding. Threats to China at 100%. India fired back, unjust. China welcomes US-Russia talks but faces curbs. A Trump-Putin summit on August 15th could ease Ukraine and drop oil prices 4 to 5%. Secondary sanctions might boomerang on Europe and the US. This could unite India, China, Russia against the US. India's NSA visited Russia amid drama. Globally, military spending's at records. US, China, India lead. BRICS is expanding as a West counter with US warnings flying. BRICS stands for Brazil, Russia, India, China, and South Africa, an economic bloc of emerging markets. Wars reshape oil and trade, think hybrid escalations, but history shows conflicts can flip to alliances. How's this tying into markets? Tariffs fuel risk-off, but de-escalation could spark rallies. That's a lot. From market dips and crypto wobbles to October bulls and global showdowns. Liquidity's holding, but geopolitics could flip the script. Remember, these tensions might push more into crypto as a hedge. What are your predictions for October? Comment below, like if this helped, and subscribe for weekly deep dives. Thanks for watching. Stay smart, invest wisely. Peace out.